Check, 1, 2, 1, 2.
Turn it up, turn it up.
Welcome to the Foreclosure Deals Coach podcast.
The tides are turning, the time is now.
Your home for the mindset, methodology, and tools needed to invest in foreclosures.
Don't you dare buy a house, buy a deal. You need to get into this right now.
Right now, yeah.
And now your host, the Foreclosure Deals Coach, Donny.
Hello and welcome back. This is the Foreclosure Deals Coach podcast, and I am your host, Donny, your Foreclosure Deals Coach, recording from our downtown Denver studios with my producer, main man, and the guy responsible for that badass intro you listened to on the way in, Mr. Jonathan Winston. How's life, Jay?
Man, life is really good. You guys usually notice that it's always good for me. Nothing can usually get me off my balance.
You're pretty unfazed. That is true.
Man, I'm just enjoying where we're at right now. The business is going good. The podcast is growing. We got new music. I'm just trying to see what else I can do.
You know, a lot of cool stuff going on. Let's get right to it. We got a lot to cover today. Want to try to stay close to that our deadlines here. So we want to be respectful of your time. We thank you so much for tuning in. 20-minute shows. That's the goal. We get close a lot. Sometimes we don't hit it, but I'd like to think we're covering a lot of great data here. So let's get to it. I found a article here on Housing Wire. Will coronavirus-induced foreclosures hit Great Recession levels? Now, first off, I want to note that it's interesting that we're naming the time frame of 2008 as the Great Recession now. This is actually the second or third time I've seen it called the Great Recession. And I think obviously that's a throwback to the Great Depression of many years ago that had a huge economic impact, and how we're comparing. Now, just doing a little bit of economic analysis suggests that nothing has happened to the sort of the Great Depression since the Great Depression, right? But we have had some very close similarities and some great scares. So now here we are in another pandemic-induced situation here where we know the economy is going to be affected, but there's a lot of unknowns on how much it's going to be affected or what's going to happen. So a couple of things the article mentions, and as always, you're going to want to head out to the Foreclosure Deals Coach page and check out this article, read up for yourself. But it mentions here that over 22 million jobless claims were filed, with an additional 15 million jobs expected to happen before this is all said and done. So 37 million people will go unemployed. We've got 3 million mortgages already in forbearance. Now, forbearance, for those who don't know, is the process in which the mortgage lender agrees to allow you to not have to make payments for as little as 90 days on up to a full year of no payments, which seems like it would provide a relief to the mortgage market. But the problem with that forbearance thing is when it's over 90 days from now, for most people, they're going to expect to get 90 days of mortgage payments plus the mortgage payment that's due on that fourth month. So you've made 3 months of no payments. Now in month 4, they're going to expect you to get all of that. How many foreclosures are going to happen as a result of that, do you think? Finally, we got purchase application data showing more abundant year-over-year deficit each week. So what they're saying on that is people who are applying for loans, right, are showing a year-over-year deficit, meaning they've got more and more stuff going late right now, right? Credit cards not getting paid, car payments not getting paid, things that are not good for the economy. If these things don't get paid, the finance companies, the big bad banks that we like to, scoff at and be upset with, well, if they don't get their money, they start tightening up lending standards. If lending standards tighten up, then less people can get loans. If less people can get loans, people who are trying to sell can't sell. And if people who are trying to sell can't sell, you're going to see more foreclosures. Will it compare to the Great Recession of 2008? And finally, as I just kind of mentioned, we've got lenders tightening credit, restricting types of loans offered, and in certain cases, we've had lenders who have just blatantly failed. We're not lending anymore. You're taking some mortgage lending capabilities out of the marketplace. People who want to buy homes can't. That's happening in real time right now. So will this compare with the Great Recession? Well, it does go on to say, and I'm going to finish up here. You make your own conclusion whether you think that's the case or not. But they have $8.3 trillion worth of disaster relief and monetary assistance being pumped into the economy right now. Okay, $8.3 trillion. So that money's got to help out a little bit to stabilize the economy. And we've got forbearance programs that ideally, if people are planning ahead, we know that that's not usually the case, but if people plan ahead, could help them out of these rough times so they can make up those payments. But I think it's going to have the counter effect. Nobody really knows. My crystal ball is broken too, so we're just going to have to wait and see. But it is fascinating that we're getting compared to the Great Recession of 2008, what we're going through right now in these times. And guys, as somebody who lived through it back in 08, just getting my license, I got to tell you, it was a fascinating time to make a lot of money. A lot of people see heartbreak and things going away. I see opportunity. That's why I became a foreclosure acquisition specialist. That's why I want you to learn more about the foreclosure market and the mindset, methodology, and tools that go into being a successful foreclosure investor. So, what do you think? Well, I'd like to hear that from you personally, so hop on the Foreclosure Deals Coach page, and don't forget, when you're ready to get started and have a deep discussion about what's going on in the foreclosure market, join us at the Foreclosure Deals Coach Insiders Group. It's an application-based thing. We're going to chat with you about whether you're a good fit for the group or not, and let's discuss this in great detail. What do you think is going to happen? Because, to be honest, it could go either way. This could be the greatest thing that ever happened in real estate. Prices going down a little bit, which was necessary. It could be the worst case scenario. We simply won't know until it happens. All right, all of that being said, let's get to the show today. Today we're going to discuss if I had $1 million. Now, Mr. Jonathan Winston's a little too young for this, but there was a band, a pretty good band, called Bare Naked Ladies. And they did a song called If I Had $1 Million. When, if I had $1 million, if I had $1 million. All right, you didn't come on the show to hear me sing, so that's all right. If you do want to see me sing, though, just check me out, because I got that too, right? I got some good guitar stuff. Just find me. You'll find me out there. Anyway, Bare Naked Ladies is a song, If I Had $1 Million. And the end of the song is, if I had $1 million, I'd be rich. Well, is that the case anymore? Right? Is $1 million enough to be rich? And more importantly, everybody dreams of having financial wealth to some degree, not having to worry about money. But if you had $1 million right now, what would you do with it? Well, I'm asked that question more often than you would think, because a lot of people who invest with me are private investors, and they're giving me money to invest in the real estate market. So that question is posed. If you had $1 million liquid at the moment, what would you do with it? Well, depending on whose show you're listening to, some of them are going to tell you you want to plow that money into the stock market, right? You could go to a mutual fund, and a fund manager is going to trade stock with that $1 million. And right now, the stock market is so crazy that in certain cases, that fund manager, we're seeing gains. I'm seeing gains in my portfolio, 8, 10, 12%. It's a great time to be in the stock market right now. There's no doubt about it. So if you had $1 million, would you plow it into the stock market? Would you put your fate in the hands of a mutual fund manager? Is that what you do with it? Listen, if that's the case, totally cool, but you're probably listening to the wrong show. There's some great finance shows out there, that can teach you how to pick out the right mutual fund or ETF or trade commodities or etc. Well, obviously, on the Foreclosure Deals Coach podcast, if I had $1 million liquid right at this moment, I'd buy real estate. But more specifically, I'd buy real estate at under market rates. Now, I know what you're thinking. This is a mindset show, okay? We're going over a lot about where your head needs to be at if you had the money. Because I'll be honest with you, you're not going to get the money until you're at a place where you can receive that mentally, okay? So if I had $1 million, it could be nothing more than a thought process until you actually have a mental plan for what you would do with it if you had it. Right? It's called visualization. It is so important. And in every show, we encourage to read one of my favorite business and personal development books, Think and Grow Rich. and we're going to give you an opportunity to get a free copy of that at the end of this show as well, so stay tuned. But I will tell you, if you had $1 million, you could invest it at 6 to 12% in mutual funds right now, or you could potentially buy a foreclosure asset, or in this case, several foreclosure assets at a deep discount and get a maximized return on that. Let's break that down for just a minute, okay? Let's say you are suddenly gifted with $1 million in cash. Step one, you're going to want to make sure you get a foreclosure-focused acquisition specialist. If you're going to find these deals on market, and I got to tell you, your naysayers out there are going to say, there are no great deals on the marketplace anymore. As somebody who's coaching people, I can tell you we find more than 50 to 60% of the deals we buy. We're going to do 50 of them right here in this local market this year, and we find those on market. So you're buying a property, ideally that's worth $300,000 to $350,000. I'm using the Colorado Springs market as an example because that's the one I'm most comfortable with because I grew up in that area and I know it very well. And you're trying to buy that property for $260,000 to $270,000. Now, what has happened? Because what I just described was a gap between the purchase price, $260,000 to $270,000. We'll just keep it simple, call it $270,000, okay? And a sales price, a value of the property of $330,000 to $350,000. We're gonna go worst case scenario on that and say that you get $330,000 total value for the property, okay? The distance between those two is $60,000. Have you made $60,000 as a result of taking some of that $1 million you just got and adding 60 grand worth of equity? Kind of, and here's why. Okay, because theoretically, if you bought that property for $270,000, it was not in tip-top shape. Here's a news flash for you, okay? If somebody's discounting something, it means it needs something. Now that scares a lot of people off. Like, why are they selling it so cheap? There must be something wrong with the house. Sometimes the something wrong with the house is it's just ugly. Right? That makes up the majority of the properties we purchase are simply ugly. They're not well done. They're not modern. In the past, there have been paint color shifts from, we used to use a brown color, basically, Killam beige, we called it, on all of our properties. Now we switched to a dove gray, which is what's popular. Right? There was old style shag carpet in the 70s that some people, believe it or not, have not updated, right? Fixtures have switched from a nickel plated or even worse, brass plated to a nickel or oil rub bronze, very popular. All these things have taken place in the design world. So the majority of the time, that $270,000 house doesn't have major problems like structural or roof or even furnace. Those systems are generally okay. What is wrong is the cosmetics. Hi, this is Donny Corum, your Foreclosure Deals Coach. It's important to have good credit when you're buying a foreclosure. A lot of people think you can come in with bad credit, but the fact of the matter is you need pretty stable credit scores to buy a foreclosure deal. So how do you find out how to increase your credit? Well, there's tons of credit repair agencies out there and multiple formulas. But one thing we found that works is reporting your monthly rental payments to the credit bureau. We partnered with rentreporters.com, the leading provider of adding your payment history direct from your landlord onto your credit bureau scores and it helping people to boost their scores up to 40 points in as little as 30 days. So to get started, I want you to head on out to www.foreclosuredealscoach.com. Now that's a messenger bot, and you're going to use the keyword rent to get more information about Rent Reporters and how you can boost your credit score by getting your rental reported to the credit bureaus. Once again, Donny Corum, your Foreclosure Deals Coach. Check it out. So on day one, you got to take that $270,000 property and figure out how you're going to get it to $330,000. And obviously, you don't want to spend all $60,000 to do it. Right? But because you're new to this, you got to get contractors. And because, people who do this a lot get great discounts with their contractors, but you've only got $1 million, right? You got the ability to buy 3, maybe 4 of these at most. So let's figure that you're not going to get the best rates on contractors. You have to spend now $30,000 to get this house from $270,000 to a $330,000 value. You with me so far? Okay, so what we have done now is we've taken 270, we spent 30, we've got 300 grand into this property. We believe that it's now worth pretty close to the median price of a home, in this case, the Colorado Springs market, which is somewhere between $330,000 and $350,000. Right? Do you sell it and take your gains? Well, maybe, but you're asking what I would do if I had $1 million, right? If I had $1 million in cash, I would buy that house. I would fix it up just enough to get it rentable, hopefully spending less than 30 grand because I've got the contractor resources to do so. And then I would own that property at a now $30,000 to $40,000 gain from what I paid for it. Right? In a perfect world, I'm financing that property appropriately. Appropriately could mean a wealth of things depending on your credit. But we're looking at a payment on this property at that price range, about $1,400 to $1,500 a month you got to pay on the property, and you're renting it in an excruciatingly hot rental market right now for $1,800, $1,900 a month. All right. So what have we added to this equation? Because so far we've got instant equity. We gained $30,000 to $40,000 in equity by doing the deal, right? Number two, we now have a rental income of the gap between the payment of $1,400, we're going to say. Let's go worst case, let's go $1,500. So I want you guys to play worst case scenario with me, okay? So $1,500 payment versus a rental of, let's call it $1,900 a month, okay? Which is very common in Colorado Springs for a single family residence right now. Okay, so you got a $400 a month profit on this deal. So we made 30 grand for doing the deal. We're now getting $400 a month, or basically $5,000 a year in return. So far, not bad, right?
So far.
But wait, there's more, because this renter is now paying down your mortgage. Now, if you've ever done a mortgage amortization calculator, you know that in the first few years of ownership, your amortization or pay down of the loan is atrocious. It's maybe $100 to $200 a month against that total payment. It's not a huge amount of money, but we got to count that. We just got to count that. Okay, so if they're paying down $100 a month, we're just going to keep that super flat. It's probably a little bit more than that, but we'll say $100 a month they're paying towards the mortgage balance that you're not paying, somebody else is paying. We've just added another $1,200 a year onto the gain here, right? So quick recap, $30,000 for doing it, $5,000 in cash flow, and $1,200 a month in mortgage pay down, right? So throughout all of this, we've already gained $36,000 an annual return, right? But the best has yet to come, believe it or not, because assuming the property goes up in value, and I know right now in the coronavirus scandal, there's an obvious sign that maybe things will go down a little bit in the short term, but you can't buy any investment based on short term unless you're a day trader. Okay, you've got to buy your investment on this $1 million based on not what's happening today, but rather what's going to happen 6, 7, 8 years down the road. And based on consistent market data, not theory, not thought, not belief. I know people are scared what the market's doing, but if you go back in time, consistently speaking, Colorado Springs anyway, has gone up by 6% a year, pretty much every year for 25 to 30 years straight. You've seen a 6% appreciation. Your house that you purchased for $330 is going up at how much per year in that case? 6% of $330. What do we got? It's about $20,000. About 20 grand a year. Right? So one more quick recap because we're running low on time here, okay? $30,000 to buy it, $5,000 a year in income, $1,200 a year in mortgage pay down, and 20 grand a year in potential appreciation on the property, okay? If I'm way off on the appreciation and you get half of that or a 3% annualized return, because we want to go worst case scenario here, you're getting $45,000 for doing this deal, right? And some of it is happening year over year for years on end, right? We have $1 million, so we bought 3 of them, and each of those has paid off to the tune of $45,000 per property times 3 properties, or basically $120,000 a year total, right? Am I off? Am I close? $130,000 a year, okay? So The difference there, that's a return. If you look at 130 grand a year against your original $1 million investment, you're making 13% annualized return. And I use a lot, and I mean a lot of worst case scenario situations here. And that's something your mutual fund guy can't do. He can't give you a worst case scenario projection. They gotta be very protective on what kind of performance they offer you, okay? Because past performance does not indicate future results, and et cetera. Kind of the case in real estate too, but not so much. Because we've got multiple times, we got track records going back decades where people who invested in rental property have come out well ahead of the game. We're talking about a 13 to 14% annualized return, assuming everything goes wrong, right? And assuming it does what it's done in the past, you're probably closer to 15 to 18% annualized return. Can you do that consistently in the stock market? I will tell you absolutely, positively not. You'd have to take too much risk to do it. Okay, so what I'm trying to do here is shift up your mindset to real estate is risky, because there's risk inherent to everything that you do, but some things are kind of a surefire deal. If you buy something in back of book, you're buying it well below retail in exchange for fixing it up. Not because you're buying it cheap because it's ready to go. They don't sell them ready to go if they're cheap. Right? They sell them because the market is rejecting those properties because they need work. So you got to have an eye for design. You got to be willing to hire somebody to paint it, or God forbid, get out there and paint it yourself. You've got to be willing to put carpet in that property, buy new appliances, et cetera, et cetera, et cetera. But if you'll do that, you're looking at a pretty comfortable 14 to 18% annualized return for making that move. And I would argue you can't beat that in the stock market. Right? So if I had $1 million, that's what I'd be doing with it. And my advice to you, if you're on the fence on whether or not you should invest in foreclosures, as a foreclosure deals coach, sort of a no-brainer. They're listening to the wrong show if you're expecting advice against investing in foreclosures. I'm going to tell you, no matter what the market is doing, if you buy underpriced assets that have a high probability of going up and you're willing to do some sweat equity to build up those properties to get to better value, you're in a great spot. It's very difficult, if not impossible, for you to go wrong, and you should get started. But here's the thing. You got to get your mindset right. You got to get your invisible counsel, Napoleon Hill mentions in his book, Think and Grow Rich. And as I promised you, for listening to the end of this show today, we're going to offer you a free copy of this book. Now, you go to Amazon right now, spend somewhere between $8 and $12, get the paper version of it, wait for it to be shipped, and never read it, right? Or I can give it to you for absolutely free and invite you into the Foreclosure Deals Coach Insiders group on Facebook, where we can go into great detail as whatever mindset is stopping you. Listen, you may not have $1 million laying around right now, okay? But one day you might, and you've got to know what you're going to do with it that's ever going to happen. So to get your free copy of Think and Grow Rich, I want you to go to foreclosuredealscoach.com, and then I want you to use keyword think, because you need to think and grow rich. So put in keyword think, and we're going to get you a free copy of that PDF. Yeah, I'd like you to read the book, obviously, but just a few first chapters will change your life entirely. So dig as deep into that as you can, and then join us on the Foreclosure Deals Coach Insider Group. We're going to go into great detail on the mindset to become an effective foreclosure acquisition specialist, whether for yourself or for your clients or etc. Go to the foreclosuredealscoach.com, keyword think. Let's get you that free copy of Think and Grow Rich and get you started. Okay, we promise we're going to keep these shows short and to the point. We value your time. I thank you so much for tuning in. Listen, guys, it is so much more about mindset than any other piece, right? We discuss all the options here, the mindset, the methodology, and the tools, right? But I'd be frank with you, if your mindset is still of the mindset, if I had $1 million, I'd throw it in a savings account and make 1.5% interest from the bank, if you could even get that, which you can't. Okay, you're not in the right place yet. We got to get your head in the right place. If you come into some money right now, you need to know what you're going to do with it. You have to be receptive to it and turn that money into more money, right? And the key is understanding the deals are out there. You just got to do the math. All right, so let's get your mind in the right place. Head out to foreclosuredealscoach.com. Use keyword think. Get your free copy of Think and Grow Rich. And hopefully, I've touched a nerve here in you. If you had $1 million, let's see if we can make you 14 to 18% a year. You can literally retire on that for the rest of your life if you invest properly at the time when it's good to do so. The market is changing. Now's the time to get in. All right, with that, this is Donny Coram, your Foreclosure Deals Coach, reminding you now and always, don't you dare buy a house, buy a deal.
Want more of the Foreclosure Deals Coach? Hit subscribe and stay tuned for more of the mindset, methodology, and tools you'll need to invest in foreclosures. Visit foreclosuredealscoach.com and text DEAL to get a list of foreclosures in your area.